This lecture will be an overview of the motor vehicle accident case and how a personal injury case is handled following a motor vehicle accident. A motor vehicle accident can include a car-on-car accident, a pedestrian being hit by a car, a truck accident whereby a truck hits a car, a motorcycle accident, a SEPTA bus accident, another type of commercial bus accident involving any type of other motor vehicle. In fact, any type of motor vehicle accident can lead to a personal injury case. This lecture is for anybody that wants a better understanding of what happens following a car accident or a vehicular accident and how the personal injury case is handled. So let's use an example. A person's involved in an accident. They've hired an attorney. What does the attorney typically do? And what happens at the various stages of the case and of the investigation of the case and after the case is litigated, meaning after a lawsuit is filed, and what happens during the course of the litigation? An attorney will typically investigate the accident, investigate how the accident happened, obtain the police report, take witness statements, get photographs of the scene, get photograph of the vehicles, that is the cars and the other vehicles involved in the accident, and will also assist in having the property damage, that is the damage to your car, taken care of. The attorney is responsible for contacting the various insurance companies involved, that is the insurance company for the other driver, the at-fault driver, and your own insurance company. A claim is set up with both insurance companies. Let's talk about how your case can be delayed, particularly at the early stages of the case, by the opposing insurance company or for other reasons. If you've been involved in a car accident, you want to get your car repaired as quickly as possible. You may need a rental car, and you're interested in getting compensated for your injuries, for your pain and suffering. Sometimes the opposing company, through their insurance adjuster, will delay on purpose. Remember, the longer the insurance company can keep money in their bank account and not pay to you, the more it benefits them and not you. They may, however, have legitimate reasons for not resolving your case, either the property damage claim or your personal injury case. Sometimes they'll have difficulty getting in touch with their insured, or they want to speak to a key witness that they can't get in touch with, or they want to speak to the police officer who took the report. Sometimes they want to take a statement of their insured or a witness or perhaps of the police officer, and they can't do that. So that could be a legitimate reason, although a frustrating reason, for delay in resolving the property damage, in getting your car repaired. Depending on the liability situation, they may not be willing to pay for your car being repaired. They may not be willing to pay for you to get a rental car. So at the early stage, there's several reasons why the opposing insurance company may not be cooperative. Other causes for the delay are sometimes that they're just not getting cooperation from their insured. They have a right to speak to their insured, and if their insured is not speaking to his or her own insurance company, that's a cause for the delay, and it's not something that the insurance company is doing on their own. Insofar as the property damage claim, let's assume that your car is totaled, and you don't have the situation where you can pay off the loan that you have on the car. Typically, you have to be aware that even assuming the other driver is completely at fault, the opposing insurance company only pays 80% of the value of the car, also known as 80% of the book value, or This next lecture will be a discussion about uninsured motorist coverage and underinsured motorist coverage. Uninsured motorist coverage and underinsured motorist coverage are separate parts of your insurance policy, and you have to request that type of coverage when you're purchasing an automobile insurance policy in Pennsylvania. The agent or the insurance company will not volunteer that type of coverage to you. You have to know what to ask for. Uninsured motorist coverage protects you and your family in the event you or your family are injured in a car accident by an uninsured motorist. An uninsured motorist is defined as an at-fault driver who fails to insure his or her own car or allow his or her coverage to lapse. It can also be considered a drunk driver who doesn't carry coverage, or a hit-and-run driver who flees the scene of an accident. Therefore, if you've purchased uninsured motorist coverage on your own insurance policy, what happens is your own insurance company steps into the shoes of the at-fault driver or the driver that flees the scene of the accident, and you can make a claim for uninsured motorist benefits against your own insurance company, and they have to pay for your pain and suffering and your personal injury claim up to the limits of the coverage that you bought. Underinsured motorist means that if the This next lecture will be a discussion about uninsured motorist coverage and underinsured motorist coverage. Uninsured motorist coverage and underinsured motorist coverage are separate parts of your insurance policy, and you have to request that type of coverage when you're purchasing an automobile insurance policy in Pennsylvania. The agent or the insurance company will not volunteer that type of coverage to you. You have to know what to ask for. Uninsured motorist coverage protects you and your family in the event you or your family are injured in a car accident by an uninsured motorist. An uninsured motorist is defined as an at-fault driver who fails to insure his or her own car or allow his or her coverage to lapse. It can also be considered a drunk driver who doesn't carry coverage, or a hit-and-run driver who flees the scene of an accident. Therefore, if you've purchased uninsured motorist coverage on your own insurance policy, what happens is your own insurance company steps into the shoes of the at-fault driver or the driver that flees the scene of the accident, and you can make a claim for uninsured motorist benefits against your own insurance company, and they have to pay for your pain and suffering and your personal injury claim up to the limits of the coverage that you bought. Underinsured motorist means that if the In this lecture, I'm going to be talking about health insurance. The interplay between health insurance and the personal injury case is something that has to be dealt with in any personal injury case. So it's a good idea to understand the various types of health insurance. And this lecture would be very good for someone who needs that understanding or who's been involved in an accident and is pursuing a personal injury case and wants to understand the overlap between health insurance and the personal injury case. So first, let's talk about different types of health insurance. Private insurance, for one, is coverage that you have purchased outside of any employer-sponsored plan. So we all know that employers can buy health insurance coverage for their employees, depending on the size of the company and depending on the number of employees, and can offer that to their employees if they choose to do so. And the employee has the right to either purchase that or utilize that and have a deduction from their pay in exchange for getting that coverage, or can choose not to. If you have private insurance coverage, you've decided or you need to purchase coverage outside of any employer-sponsored plan. Now, an employer can have a plan that it sponsors for its employees where the employer pays for its members' medical care as opposed to purchasing insurance coverage that would be placed in that situation. So an employer can have a plan in place and they can decide to set money aside from their profits to pay for their employees' health insurance needs. And that's a self-insured plan. That's separate than the employer buying insurance coverage from a health insurance carrier and letting them manage and run and pay for the health insurance coverage of their employees. And that's important to understand those two differences because it's very important later on when we talk about liens, liens, and something called subrogation liens, where employer plans have a right to be reimbursed. We're going to talk about that in one of our later lectures. They have the right to be reimbursed from the personal injury proceeds, whereby if you settle your personal injury case or are successful in getting a jury verdict in compensation for your personal injuries, your employer's plan may have a right to subrogate or get money paid back. We're going to talk about that a little later on. Moving forward, different types of plans within the structure that we've just talked about. HMOs is a health management organization. HMO plans offer healthcare services through a network of providers who agree to supply services to members. Typically, you must choose a primary care physician, a PCP, in your HMO, and your PCP takes care of most of your healthcare needs, and they act as the gatekeeper for referrals out to specialists. A PPO is a preferred provider organization. A PPO offers much more flexibility than HMO, and this type of health insurance plan features the ability to see a doctor or a specialist that you would like to see without having to go through your primary care physician, your PCP, as the gatekeeper. In exchange, your premiums are somewhat higher than an HMO. You can purchase health insurance coverage privately, or it can be covered under an HMO or a PPO, either privately through your employer-sponsored plan. This discussion is going to be about liens. Now that's spelled Liens, also known as a subrogation lien or a right of reimbursement by an insurance company or an entity paying benefits on your behalf. There are several instances in which you must repay other entities out of the money that you receive as a result of a personal injury settlement or from a jury verdict, and that's where these liens come into play, or subrogation lien. A subrogation lien is a legal right of reimbursement that a health insurance company has, a disability insurance company has, workers' compensation insurance companies have, the Department of Public Welfare and Medicare have, and these entities attack the settlement or verdict obtained by the personal injury victim. You may have a lien against your case if any of your medical bills were paid by Medicare or Medicaid, or if your bills were paid under an ERISA-governed group health benefit plan that we talked about before, that is a self-insured plan. If you were injured on the job and you received workers' compensation benefits, either for health benefits or for wage loss, your workers' comp carrier has a subrogation lien against your personal injury settlement or the jury verdict that you've obtained from the at-fault party. If there are unpaid medical bills, those are also lienable, meaning they have to be paid out of the settlement monies of your case or the verdict. And in addition, if someone owes child support, that is governed by the Department of Public Welfare, and that has to be dealt with and paid back from personal injury settlements and verdicts in certain circumstances. Typically, if your health insurance plan is seeking recovery from you,